Morning student, welcome back. Today's topic is treatment of revaluation of assets and reassessment of liabilities. Since in previous lecture we had started the treatment of reserve and accumulated profit and loss and treatment of workman compensation reserve and IFR, that is investment fluctuation reserve. So today we will doing the treatment of revaluation account. Revaluation. At the time of reconstitution of firm, assets and liability of a firm must be revalued. It is possible that with the passage of time, some of the assets might have appreciated in the value, while the value of certain other assets might have decreased, and no record has been made of such change in the book of account. Revaluation of assets and reassessment of liability became necessary because the change in the value of assets and liabilities belongs to the period before the change in profit sharing ratio and hence must be shared by the partner in their old profit sharing ratio. Revaluation is a nominal account. It's also called profit and loss appropriation account in some cases. The revaluation of assets and liabilities may be given effect in two different ways. First, when revised value are to be recorded in the book, and second one is when revised value are not to be recorded in the book. When revised value are recorded in the book, in such case, revaluation of assets and liabilities is done with the help of new account, that is revaluation account. This account is nominal in nature. According to nominal nature, all the expenses and losses are debit and income and gain are credit. Therefore, if there is a loss due to revaluation account is debited, and if the revaluation result is profit, the revaluation account is credited according to their nature, that is nominal account. Liabilities is done with the help of new account, that is revaluation account. Such profit or loss is transferred to capital account of all the partner in their old profit sharing ratio. So some journal entries for the revised value are to be recorded. At the time of increase in the value of assets, we have already read about assets and liabilities in class 11th. There are two approach of the rule of journal entry. That one, first one approach is traditional and second one approach is modern. According to modern approach, there are 5 accounts: assets account, capital account, liabilities account, revenue account and expense account. So for assets account, if increase in the value of assets is debit and decrease in the value of assets is credit. And for liabilities account, increase in the value of liability is credit and decrease in the value of liability is debit. On that thing, first one is for increase in the value of assets. According to their nature, that is assets account, assets will be debited to and revaluation account will be credited. So assets account debit to revaluation account. For decrease in the value of assets, according to the nature of assets, assets will be credited. That's why entry will be revaluation account debit to assets account. For unrecorded assets means assets will increase When assets will increase, then assets account comes in debit side. So unrecorded assets account debit to revaluation account. Same as for increase in the value of liabilities. For increase in the value of liabilities, liability account will be credit. So revaluation account debit to liabilities account. For decrease in the value of liability, journal entry will be liabilities account debit to revaluation account. For unrecorded liability, it means increase in liability. So journal entry will be revaluation account debit to unrecorded liabilities account. Now, when revaluation account shows profit and loss, if if credit side of revaluation account is in excess, it shows a profit. So entry will be revaluation account debit to partners capital account, and profit must be distributed in old partners old ratio. When revaluation account shows loss, if the debit side of revaluation account is in excess, it shows a loss, and loss will recover by old partners in old ratio. So entry will be partners capital account debit to revaluation account. Second case, when revised value are not to be recorded. If partner decide that the changed value of assets and liabilities are not to be recorded in the book of account, in such case, a revaluation change in the value of assets and liabilities is recorded by passing a single adjustment entry. For showing the single adjustment entry, firstly we have to calculate gaining and sacrificing ratio. And before gaining and sacrificing ratio, we have to calculate the net effect of revaluation. For calculating net effect of revaluation, we have to calculate the debit side of all the revaluation debit side item of all revaluation account, and added the all the credit side of revaluation account and differentiate both. The net effect of revaluation will calculate, means firstly we have to prepare revaluation account, then after we have to calculate gaining and sacrificing ratio. So account uh, so net effect of revaluation is comes out, that is net effect of revaluation, it may be positive or negative. If it will be positive, then accounting treatment is for the profit on revaluation, that will be, if it is positive, that entry will be gaining partners capital account debit to sacrificing partners capital or current account. Capital account when capital is fluctuating, and current account when capital is fixed. You have to write current account. For loss on revaluation, if net effect will be negative, then entry will be sacrificing partners capital or current account debit to gaining partners capital or current account. These entry will be passed when partner don't want to show the reserve account, or they do not want to change in distribute the general reserve. Then also we have required to change by passing a single journal entry, that will be gaining to sacrificing if positive effect, and sacrificing to gaining partner if effect is negative. So performa of revaluation account. Revaluation account debit, credit, particulars amount. According to nature of liability, to increase in the value of liability account, to decrease in the value of assets according to nature of assets to unrecorded liability, and buy side by increase the value of assets by decrease in the value of liability by unrecorded assets. After that, balancing figure, that is to profit on revaluation transfer to partners capital or current account A, B, C in old profit sharing ratio by loss on revaluation, that is also a balancing figure, by loss on revaluation transfer to partners capital or current account if X is in credit side of this account, it shows profit balance, and if X is in debit side of this account, it will be shown loss balance. Such a profit and loss transfer to old partners in old ratio. For example, question number 21. Ashish, Akash and Amita partner profit sharing ratio is equally. The balance sheet as at 31st March 2020 was as follows. Creditors rupees 75,000, general reserve rupees 90,000, capital account Ashish, Akash and Amit is rupees 3 lakh, 3 lakh, 2 lakh 75,000. In asset side, cash in hand rupees 24,000, cash at bank rupees 1,40,000, debtors 80,000, stock 1,40,000, land and building 4 lakh, machinery 2,50,000, advertisement suspense is rupees 6,000. The partner decided to share future profit in 2 to 1, that is new ratio, and old one is given equally. Value of assets to be reduced 1,25,000. Decrease in the assets. Here assets will be decreased. So in revaluation account, it will comes in debit side. Here 2, that word is written 2, means up to 1,25,000. So actual amount of stock is rupees 1,40,000. So 1,40,000 minus 25,000, that will be the reducing amount. Value of machinery to be decreased by 10%. Land and building appreciated by 62,000, means land and building appreciated by up to 62,000. So increased amount is rupees 62,000. Provision for doubtful debt are made 5% on debtors. Provision is a liability, that is unrecorded liability, that will be increase in liability. Akash was to carry one reconstitution of the firm at a remuneration of rupees 10,000. Remuneration is an expense. All the expenses and losses are debit. Pass necessary journal entry to give effect from the above. For preparing journal entry, first case is value of stock to be reduced to rupees 1,25,000, means decreased value is rupees 15,000. Here stock is given 1,40,000, it's reduced up to 1,25,000, means reducing value is rupees 15,000. So here stock will be reduced. Stock is reduced by. So reduced means when assets will be reduced, then it will comes in credit side. So entry will be revaluation account debit to stock account, that is 15,000, 15,000. It is a decrease in the value of assets. Second one case is value of machinery to be decreased by 10%. Here in this question, machinery is given rupees 2,50,000. 10% of 2,50,000 is 25,000. So entry will be revaluation account debit to machinery account. In third case, land and building to be appreciated by 62,000. So land and building appreciated means increase in assets. So entry will be land and building account debit to revaluation account. Amount is rupees 62,000. That will be increased by 62,000. Fourth one point is provision for doubtful debt to be made 5% on debtors. In question, here debtor is given rupees 80,000. So 5% of 80,000 is 4,000. Provision is a liability. Increase in liability will be credit. Next point, Akash was to carry out reconstitution of the firm at a remuneration of rupees 10,000. All the expenses and losses are debit according to nominal in nature, according to nominal account, and revaluation is a nominal in nature. So, entry will be revaluation account debit to Akash capital account. Revaluation account debit to Akash capital account, that is amount is 10,000, 10,000. Firstly, we have to calculate all the debit side of revaluation, that is 15,000, 25,000, that one 40,000, total is 40,000, then 4,000, 44,000 plus 10 is equal to 54,000. But in credit side, that will be 62,000. The sum of debit side is rupees 54,000 and sum of credit side of revaluation is 62,000. Your credit side is excess than the debit side. That's why it became profit. So profit will be distributed in old partners old ratio. So entry will be revaluation account debit to partners capital account. Difference is rupees 8,000. It will be distributed in old partner old ratio. Old ratio is equally, that is 1:1:1. So profit will distributed in Akash, Ashish and Amit as rupees 2,666.6. So we will distribute it 2,667, 2,667 and 2,666. The sum of these three is equal to 8,000, being gain on revaluation transfer to partners capital account. Okay, have a nice day.